What's up guys, welcome back to the channel. My name is Juliuz and I'm watching the best videos of the trading industry with you together, so you don't have to do it all by yourself. Today I'm back with a banger video, fxalexg. I tried to make $1 million trading in 24 hours to prove it's not luck. $1 million in trading in 24 hours, guys. This has to be a banger. Almost 200,000 views 5 days ago. You're gonna see it a little later.
What if I told you
Oops, let's get right in. You guys, do not forget to leave a like and subscribe to my channel to not miss out on future reaction stuff. And of course, now let's immediately get into the video and let's find out if you can make $1 million trading Forex in 24 hours. Here we go.
I tried to make $1 million in under 6 hours trading and
okay, now we are under 6 hours. I don't know what to say. So my first thought, okay, before entering in this video is that this cannot be real, because then he would be one of the best traders in the world, or the best trader in the world basically. He would win every World Cup championship in the first couple of days, unless he has a $1 billion trading account. This is insane.
I almost made it. Well, if you weren't part of it live or you didn't see the before I entered the position, you probably wouldn't believe it. Well, that's why exactly I recorded everything live, shared it on my Instagram, shared it on my TikTok, on my community in Telegram, and tens of thousands of people, literally tens of thousands of people, as you can see here, caught the exact same position that
Are we talking about only one position?
I shared hours before it happened. FOMC was coming up a couple hours before I entered these positions, and I explained to people the reasoning as to why I should have a high probability of going to the downside. So let me give you the context on how I actually almost made $1 million. Now, first of all, you guys may probably be wondering, how can I possibly make $1 million on a single trade? Am I taking a single $100 into $1 million?
No.
Am I risking $1 million to make another $1 million?
More likely?
No. So I have a $3 million trading account with this specific account that I took these trades on, and I decided to risk about $130,000, $140,000 per position. So I'm basically risking $300,000 on this one specific trade.
Per position, he is opening 2 positions, or what is he talking about?
And if I were to catch a 1 to 4 risk to reward after fees, after swap, I would be left with $1 million. So I'm putting up at risk $300,000.
So he's risking 10% of his account to make, let's say, about 35%. All right.
$1,000 in order so I can make $1 million. Now, I quite did not get there. I ended up closing at $700,000.
Oh, what a shame. Only $700,000 in 6 hours. Oh.
I want to give you the full picture.
Guys, is this real?
As to why I did that and why I decided to not hold the entire way. And where if I would have held, the trade would have actually reached my $1 million.
Okay, let's say he's entering the World Cup trading championship and he's not risking 10% of his account, but 20% per position. He really would only need a couple of these trades to win the championship, and he has like 1 whole year to do that. And usually the winner of the World Cup makes about 500% in a year. With this amount, you are at least on the top 3, top 4. Most of the time you're gonna win it. If he's gonna risk 20% to make, I don't know, say he's aiming for a 1 to 4, he's almost doubling his account. Okay, so he only needs a couple of those positions to win the World Cup championship. So I really am amazed that he's able to do that with such big size.
Take profit. So let me give you the full context and breakdown behind
Because doing something like that with $100 is not hard, but doing that with $3 million is really, really hard.
this trade that still has so much more potential to continue in the direction that I predicted. So the 2 markets that I identified on Sunday that I was extremely interested in entering the position was going to be NZD USD and Euro USD. Now, both of these positions have already had the big move to the downside. It almost looks quite obvious that this move was predictable at this area after the fact that it happened. But I need you to understand the real reasoning as to why I entered this position. So let's take this back 48 hours prior to this.
I already reacted to him explaining his strategy. So he's making like a top-down analysis, starting at the daily, going lower, 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 executing on lower time frames. Yeah, make sure to check my reaction out. It's a couple of videos back on my channel.
Having the move. So when I did my Sunday swings with my students, which I break down the top markets that I'm interested in trading with them every single Sunday live, the first thing that I identified on NZD USD is my top-down analysis. I identified the weekly time frame being extremely bearish. Now, many people would claim that it could be bearish from this lower high to this lower low, and they would be very, very incorrect, because the correct lower high would be this lower high and this lower low.
How is that a lower high?
Weekly area of interest right here in the middle.
Oh, it's actually a lower high. Okay, I was not able to see that before. So we have a lower high. Everything's right. Don't mind me.
Whenever we're below, we have very strong rejections to the downside. Whenever we're above, we head up. Whenever we're below, we head down. We head down. Whenever we're above, we head up. So the 2 weeks prior to where we are right now, we had a massive weekly bearish engulfing candlestick closing below that area. The week prior to that, we came back and then retested. So not only does this indicate to me that we're below this area, but when I go to the daily time frame, I can see a very strong head and shoulders pattern, which is my favorite reversal pattern that exists in the market. So you can have here left, you can have this be a head, and then this be a weird right shoulder, a bit unproportionate. But the most impactful reasoning that I entered this position is because of the daily time frame. It's the market placement and where this market is at this specific area. As you can see, this is a very well respected daily support area. Whenever we're above, we head up. Whenever we're below, we head down.
Totally solid analysis here on the technical
It
side.
really is that simple. Many people, they get confused when, should I trade with the trend? Should I trade off of areas of interest and support or resistance? When you become an experienced trader, you understand that market placement is much more important for entering a position, and the trend is your friend to let you determine into where you should hold.
So basically, every advanced trader is more or less trading at some location, which is usually support and resistance. If you call it point of control on volume, value area high, whatsoever, usually it's some kind of support and resistance. And even if you're trading on the 1 minute chart, you usually are positioning yourself with the trend at support or resistance.
You take profit. But where you enter a position is not,
And now he's just doing that on the daily.
not purely off of the trend. The trend will only
So
tell
I'm gonna make the video a little faster because we still have like 20 minutes to go.
you that you should just go in that direction. Now, where your entry is in that direction is where this area of interest comes in and is extremely key. So this area of interest, not only have we broken below it, we've retested it, we've rejected it, we've came up, have had this massive liquidity grab, which is...
Yeah, he's explaining that in very detail. Basically, we're just now rejecting from previous support that is now becoming resistance.
This is the fake out. This is the institutions taking out the retail traders, fake out, wick out, whatever you want to call it. And after that, we still managed to close to the downside. So not only does this look beautiful that we're still below it, but we've already saved ourselves from entering at this area of interest because the wick out has already happened. And I can tell the wick out has
That's true.
already happened because when I go down to the 4 hour, what I see is a perfect head and shoulders pattern that is forming on itself. And if I just look left, I can very much see that this market is built off of head and shoulder pattern. Left, head, right shoulder here. We have another bigger head and shoulders pattern right here. Left, head, and then a right shoulder right here. We have another head and shoulders
okay. You can find those patterns more or less in every movement. Depends on where you draw the pattern.
patterns right here. Left, head, right shoulder. And then obviously the one that we were forming right here, we have a left head and then a right shoulder that we were about to form. So I'm really just looking left for me to be able to guess what's going to happen to the right. And if every single time something happens exactly like what happened previously, I can expect for it to happen again. So this market has had the liquidity grab, which is this fake out right here. We broke the structure because this market was bearish, lower low, lower high, lower low, higher high, higher low, higher high. We shifted the structure, making this market bearish, and then we came back to retest this area once again. This is exactly where I was looking for my entry signal on this position to head to the downside. We're right at the smack middle of the week. We are prior to a very volatile session, which is London session, and all I'm waiting for is my perfect engulfing candlestick to enter.
Okay, he's waiting for engulfing candle. Now we know what he's talking about. Okay, finally what he's waiting for, because all of that previously was just big analysis why he's positioning himself short. Now we're gonna see how he's doing that.
Now, I get my engulfing candlestick, but as soon as I get that engulfing candlestick, I'm not active in front of the markets. I don't remember really what I was doing, but I wasn't active. And then I simply come back into the market a couple of hours later, and I see that it has...
Okay, now we are at the 4 hour chart. The problem with those big charts is we have to sleep at some point or have to work or do whatever we have to do. And we are not always there once the 4 hour candle closes. This is what he's talking about here, okay? So the perfect entry, unless you set a limit order, or in this case a stop order, you probably won't be there at the exact point.
As indeed rejected from this right shoulder. I would much rather enter a position off of a confirmation rather than anticipation. I'd rather enter the position later into the trade after the market has shown me its hand first, instead of me anticipating that this is going to be a right shoulder and I try and get a sniper entry all the way.
Yeah, and that actually, I'm very surprised about the good quality advices from Alex here, because this is what I see a lot of beginner traders do very, very wrong, and I even catch myself doing this mistake here and there. Still, after 6 years of trading regularly, we want to be too early. I'm convinced of an idea. I want to be as early as possible, of course, to not miss out on some ticks I could already add once the market is going into my direction, but we are too early in some occasions, and beginner traders are mostly always too early. We have to wait for the momentum to start in the direction we're anticipating. In the best case, it's with the bias, it's with the trend, but we still have to wait for a confirmation, for a starting momentum candle. Doesn't matter which time frame or which range or whatever chart type you're using, but you have to wait for a start of the momentum before you position yourself in the momentum, okay? Do not want to be the first one, because being the first one usually means that the market is right now not yet into the movement you want to trade. So basically, if you want to make a long trade and the market is currently still going short and you want to be the first one, you are buying into a falling knife, because it's way, way, way harder to be the first one at the exact turning point of the market than to just wait a little bit until the momentum started and then you position yourself with the trend.
Way at the top here. I see many traders get burned trying to predict these perfect sniper entries, and it really doesn't make any sense. It doesn't make you more money, it doesn't get you a better risk to reward, it doesn't better your odds in winning at all, actually. If I can wait till the horses are out to the races and see what horse is ahead, and I can then place my bet, it would be a lot easier to place a bet on whichever horse is ahead rather than having to place a bet before any of these horses take off in the first place. So this is exactly that. If I can wait for the market to show me that it's actually rejecting this area and going in that direction, I would much rather wait for that in order for me to enter this position. So that's exactly what I did. I entered the position after I have the confirmation that this market is actually headed in that direction. I place my stop loss at an area where if it gets hit, I'm entirely wrong. Because if after the daily time frame we have already had that wick out, if this daily time frame comes back up into the upside over here, that means that we're most likely going to close above this area of interest. Then we will have a retest of this area and then head to.
That could certainly happen. There might still be a chance of a liquidity grab above this bearish pin bar and then a move lower, but we have to put our stop somewhere, and to put the stop here at higher prices when we are anticipating the short move now is the right idea to do.
The upside, meaning that I would be entirely wrong about this position. But since we've had the liquidity grab, the day after that we had a rejection and we still closed below.
If he's opening the position right here at this point, I think it would be already possible to move the stop loss way lower, because as soon as this candle is getting close to its opening, you are already doomed.
This area of interest, this is showing me every single possible reason that it's going to struggle to break above this area. So I'm very confident when it comes to my take profit, for my stop loss. Now, what I did after that was literally just enter the position. After I enter the position, what I wait for is for the market to have FOMC, its news events. And that's exactly what it did. So I posted on Instagram that I entered these positions. I posted.
But waiting for a FOMC, I mean, that's really, really risky, because there might be a chance. And look at this, we are now forming higher lows here at this specific price here. So in case the FOMC turned out the other way around, we possibly would have seen a spike higher. Okay, now he would have been stopped out at his stop loss, so that would be no big deal, unless losing like $200,000-$300,000 would be a big deal to you. I don't know. But yeah, that the FOMC turned out this way. Of course, I don't know if he was so certain that the FOMC would push markets lower, but it's a little risky.
That I was going to wait for the FOMC to happen at 1 p.m. EST. What ended up happening is that these news fundamentals actually ended up happening at 2 p.m. EST, and they had this massive push to the downside. The fundamentals will always follow what the technicals are doing 80% of the time, 70% of the time. But you just need to understand how to predict.
Okay, he's talking about that the FOMC outcome will follow the technical analysis of the market. So if the market is currently on the technical side, is in a short trend, then it doesn't matter what the FOMC looks like, it will push the market lower. Okay, I'm not too sure. Could be.
Predict the direction of the market. So when I see all of these indications that this market is heading to the downside, and I see this massive news events that is happening a couple of hours before this trade is setting up the perfect entry. I'm like, well, the news is literally going to give it the push that it needs. I couldn't find any logic as to why this position should have headed to the upside. Zero. I could have not made any sense of it. Now, when you look at it after the position is gone, it's like, well, it almost looks quite obvious. It looks like a very simple break, retest, sell, break, retest, sell. Very simple. Now, when it comes to the take profit placement of this position, I place my take profit at the next area where if it gets hit, my trade can have a reversal. So I actually placed my take profit quite above this area. I actually ended up placing it somewhere around here at a 1 to 2.
That is typical technical analysis. Okay, you have different locations and you want to trade from one location to the other. That's exactly what I'm doing as well. The difference is that I'm trying to get in with a very small position, of course, only as the market already started momentum, and then I want to add on the way to the next location. Has an advantage and disadvantage. The advantage is that I can build up a very, very big position until the next location is hit and profit very, very big with a very small initial stop loss. On the other hand, if you are adding and worsening your entry price and the market then before hitting your target location makes a little pullback, then you get stop out break even a lot, because you do not want to let that big added position turn against you, because then you will lose unproportional amount of money. But there are examples where the market is then having a pullback before your target is hit and you get stop out break even because you added so heavily.
I always have a minimum of a 1 to 2 risk to reward in my positions, because this way I can make back my losses whenever I have losses, which losses are inevitable in trading. And what happens is after the market had this massive push to the downside, I like to follow that momentum, and I ended up closing down here. So I never put a take profit, because if I am trading with the trend is my friend, I should be correct about this position for a very long time. So I had a 4-hour day trade entry on this position because I'm entering off of mainly this daily area of interest. And I had kind of a daily take profit. But if I were to trade this as a weekly trade, and you guys that can look at this months and months ahead after this video has been posted on YouTube, you can come back and look at this. I believe this market will be way down here in the future. Very near
Should
future.
we check that? So this was like June 15th or something, or a little later. So we have at least 1 or 2 weeks after that. So we can take a look at the weekly and see if it's right and the market actually went lower. So let me check that. So look at that, guys. We are seeing this candle here in his video, and actually the market went a lot lower. So he was kind of right that we are testing those lows. So if he would have held his short position here, he would have made definitely some more money. So let's continue.
4 to 8 weeks, this market could be all the way down here, simply because that's just what the direction of this market is headed to. That's what this structure is telling me. I just decided to enter this position with a day trade and a day take profit, and it's what made sense for my position here. And I was getting out because obviously at this area, whenever
this is a very good trade, but the position size he's trading it, that's unreal. This is, I cannot comprehend it. Hopefully he tells us a little bit more about what it feels like trading with such a big position size.
Above we head up, whenever we're below we head down. So if we're above this area, it makes more sense to get out of it because we can have that reaction to the upside. So I always place my take profit where I can have a reaction from that area. The closer, the better, and always at a minimum of a 1 to 2. Now, Euro USD is pretty much the exact same thing. I just actually entered off of a lot of anticipation. This was really a gamble, I'm not gonna lie. And honestly, this was a bit of high risk because I technically entered the same position twice. Now, what do I mean by that? Well, I entered basically the USD getting stronger, because as you can tell, Euro USD sell, strong USD.
I don't think that this was a gamble at all. If this is really the point where he entered, he saw that the market is in a short trend, so he's positioning himself with the bias. Of course, we're on a daily chart, okay, so this is like month of data. But he's with the bias. Market went lower, found some support here. Retested this area that he perfectly drew in. And then, as we can see, the market started the momentum, what I was talking about earlier. The market started the momentum, and he only then entered the position after he saw that the rejection is starting. Put a stop loss up here, totally valid, after the momentum is starting, and now he just lets the position take out the lows, or at least went back to the lows, and that is totally beautiful trade, actually. Of course, that the momentum is so big that this happens in 1 day, that is exceptional. This could very well happen in like 5 or 6 days, but looks really, really good.
NZD USD, sell, strong USD. If the USD would have gone in the opposite direction, if it would have gotten weaker, I would have lost both of these positions. But this one was same exact reasoning, market placement. This market very much bearish. Once again, this would be the lower high on this market right here, and this would be the lower low on this market right here. Many would call this market bearish because of this lower high and this lower low, and they would just be wrong. This is the lower high and this is the lower low. Now, this market, what it has done, it has the same exact thing. Close with a massive bearish engulfing candlestick, has come back to retest round cycle psychological level, 1.16 thousand, and it's a very well respected weekly area. Whenever we're above, we head up. Whenever we're below, we head down. Whenever we're above, we head up. Whenever we're below, we head down. Really is that simple. When I go down to the daily time frame has just approached this area. Very well respected as well. But the reason why this is a higher risk trade is because I have no confirmation. I have no liquidity grab. I have no rejection candlestick. While on NZD/USD, I have a...
Actually, I analyzed that trade already. Do we see something of his execution? So let's skip a little bit here of the technical analysis.
I decided that, and everything happened so fast, right? This happened in less than 6 hours. I decided to not be greedy and not break my trading plan and overstretch it, and just accept that I have predicted the direction of this move and I've capitalized off of it, and I move to the next one. These moves always present themselves. There's always another opportunity like this that comes down the road. I've been at this game long enough to know that. I've been at this game long enough to see it that many times, and I'm totally fine if this market from this moment right here would just do something like this. I won't feel any type of way because I already got what I was okay with, and I would have been not okay.
And that's a totally right thing to do. Exiting at a location where you anticipate that, in this example, support is gonna be found, then why the hell should you risk your open profit? There is a chance that the market will just crash further through all of your locations. But the reality is that the chance is higher that we're gonna find at least some support, and then you could always search for re-entries for a lower move. But first of all, protecting your capital, and keep in mind, I'm in the position where I say also your unrealized profit in the end is capital you made that actually you earned already. Protecting that, not giving everything back, is something we should consider doing.
Hey, if this market came back and took me out of break even, I've had every possible scenario happen to me.
It doesn't mean you have to take profit too early. Okay, let the position run, add to a working position, but at a location where you really are saying, okay, now the chances are very, very big that we're gonna see at least some rejection here. Take the profit.
And this is what I'm very comfortable with. And that's what a lot of traders need to work on when they enter the trade, is stick to their plan. And this is my plan. My plan was to put my take profit out of 1 to 2. And if it goes past that, continue with that momentum up until where it makes sense. And then you close out. And that's exactly how we nearly made $1 million in this position. My $1 million day is coming very soon. And
unbelievable.
And I'm glad that I can have this moment.
Do we see some proof on his phone or whatsoever that this was $1 million? I mean, he just told us here, but I guess we haven't seen anything really.
Momentum happening here at the trading floor. You guys are probably wondering, where the fuck is Alex? What is he doing? Well, this is not my office, right? Some are very different. I'm building a trading floor right now. So this is one of the desks that is going to be someone's. Somebody's going to come in here and use this desk to trade. And I've definitely set the standard quite high. This is my first time taking a trade inside of the trading floor. And it has almost been my record-breaking trade. So whoever's trading at this desk in the future, good luck. The standards are very high. And I expect nothing other than what you have just seen in this video. Full, deep understanding of the exact trade that you're entering. Knowing why you should be entering it, knowing why you shouldn't be entering it, and most importantly, accepting the risk. So this is a very warm welcoming to the trading floor. I'm very excited. To any trader that is welcome to come out to the trading floor. Anybody that wants to challenge me, I challenge any trader that would like to sit in one of these desks over here. Yes, you want to show them? Any desk right here, you guys are welcome to appear here once you're invited. This is an invitation only to be part of this trading floor, and out-trade me. If you can out-trade me, you got my respect. If you can't out-trade me,
with this position size, it will get probably a little hard to out-trade him. Percentage-wise, could be possible. But of course, in the absolute amount of money, that is crazy. But that looks really decent, okay? So this actually looks like a nice trading floor, and trading in such an environment, or at least here and there on some occasions, is quite nice, I guess. And maybe a welcome change to us traders who are usually just trading from home on our desk.
Respectfully, not respectfully, don't fucking talk about me. You know, if I got the balls to make $700,000 in 6 hours, full porting, FOMC, you could have the balls to come in here and bro, Saz, do you think they can handle the pressure? Sitting right there? You don't think so, right?
It's not pressure.
I don't know if they could, bro. I'm calling out all traders here on YouTube as well. Calling out every single trader. If you think you can out-trade me, I will send out a formal invitation for you to come out to the trading floor and out-trade me. I will take my hat off and give you my respects if you do. And if you don't, you will be welcome to leave as well. And the fact that this was my first trade here in the trading floor.
He made some really good trades in this video, okay? So that looked really, really good, and I'm amazed just by the pure amount of money.
I feel myself breaking that 7-figure take profit happening in this exact same trading floor with many of you that are going to be part of this experience. You guys are my students. You guys are more than welcome to be invited out here. We're going to be hosting in-person events, educating people in person, training people in person.
Okay, so let's skip a little through that. We saw something here on his phone. Was that?
And I almost made it. Well, if you weren't part of it live or you didn't see the before.
So it was like recorded live, apparently.
Before I entered the position.
Yeah, it looks like this is a recording of him entering this very same position.
You probably wouldn't believe it. Well, that's why exactly I recorded everything live, shared it on my Instagram, shared it on my TikTok, on my community.
Okay, aside from that, we are not seeing a lot in this video, but the trade execution was very, very nice. This deserves a like. Explanation, very, very good. Beautiful trade here. In a bigger time frame, but we can do the same on smaller time frames or in other chart types. I'm trying to recommend you range charts because I like them very, very much, and basically you can just do the same on them. So this was a really, really good video and I enjoyed it a lot. Thank you, Alex, for showing us what is really possible in the markets. Guys, make sure to stick to your plan. If you're not trading with $1 million, just trading with a couple $100, then be satisfied with a $50 profit. Doesn't need to be a $500,000 profit. Thank you guys for watching. We're gonna see us in the next episode. This was just incredible. I cannot believe it, and great video. Thank you. Take care of yourself, guys. Bye bye.